Good morning, everyone. So today we are starting with our next topic, which is known as capital market. In capital market, we'll be looking at these major points. That is, what do you mean by capital market? What are the types? How it works? Why we need it? And what are the rules, regulations, and who is the regulator? So capital market, as we already discussed, it's basically about there is a segment in the society which is having the surplus money, and there is a segment in the society which needs it, that is company. So basically money market or capital market helps in channelizing this money that is from surplus money to the segment which is in the deficit of money, right? So capital market is basically a link through which this fund transfer will happen. uh, in this segment we'll be dealing with the first segment of capital market, which is known as primary market. Secondary market will be dealing in the next video. So primary market is a market for the new issue. Nature of funding can be anything. It can be equity, it can be debt. Generally it is assumed that primary market means only equity, but it's not like that. Primary market can be of equity, or primary market can be related to debt also. So in general, the primary issues are categorized into three categories. The first category, which is known as public issue, the second category, which is known as right issue, and the third category, which is known as private placement. Public issue, it's very common, even you people might be investing. So there are two bifurcation. One which is known as IPO. IPO means the company is coming for the listing for the first time, issuing shares for the first time. If the same company is coming for the issue on the market second time, then that is what is known as FPO. That is what is follow-on public offering or further public offering. Right issue is basically the company is issuing the share, but to a very specific segment of the share, and this specific segment of the share, specific segment is what is the existing shareholders of the company. So right issue is an offer of sale of the security to existing shareholders only. So if I'm not a shareholder of the company, I'll not be able to participate in the right issue. The third category, which is known as private placement. So private placement again is categorized into three different segments. First one, which is known as private placement, the second one, which is known as preferential issue, and the third one, which is known as QIP, that is a qualified institutional placement. For better understanding, we'll be looking at this definition. So private placement is direct sale of newly issued securities by the issuer to a smaller number of investors through merchant bankers, and the number is roughly 49. You cannot go beyond 49. So it's not a stock market. It is basically some people or some institutions will be issued the securities of the companies, which is not that complex so far as the documentation part is concerned, the time taken is concerned. So that is what is the funda of private placement. If you don't have a time, if you don't want to go to SEBI again and again, if you don't want to go for too much paper documentation, then you will go for private placement. Preferential allotment is the same logic. However, when you talk about preferential allotment, it is basically allotment to the preferred investor, and that is how the name came, that is preferential allotment. The third and the last category of this is what is known as qualified institutional placement. Qualified institutional placement is you are issuing the security to QIBs, that is qualified institutional buyers. So who are QIBs? QIBs are basically the institutions or the financial institutions who have financial resources and expertise to analyze the particular issue, to evaluate the potential of the company, and to understand that whether they should invest in the security, yes or no. So they must be registered with the they must be registered with the SEBI. So these are the people who are actually the investor when I say qualified institutional placements. So this is just a screenshot to understand that if you want to go for red herring prospector, or if you want to understand what do you mean by draft offer document, or if you want to understand that public issue in public issue IPOs related documents are coming from which place. So this is the site that you need to visit. It's a SEBI site. Go for the public issue, and these are the documents that you can see. You put a name in the recent companies which have submitted DRHP or RHP will be here. These are just an example which indicates that the recent IPOs of Sahaj Fashion, Basic Fly Studio, Monopharma came, different companies, different industries, and just an example that how they are putting a price. This is a case wherein There were some 100 sugar mills in UP which faced SEBI action for breach of the norms which were related to private placement. As we have seen in the previous slide, that private placement means you are talking about at max 49 institutions or investor, not more than that. The moment you're going beyond 49, it become a IPO. So these are the sugar mills which have issued the securities to more than 49 investors, and that's how SEBI came into picture. And SEBI said that it is assumed to be it's a deemed public issue, so it is not allowed, and that is how they were ordered to take back the issues which were made. This is the example of a preferential allotment. So in preferential allotment, as we have talked about, that preferential allotment means you are issuing the securities to the preferred investors. So over here, you can see that Trent 6 shareholder note to raise funds from Tata Sons. Trent is a subsidiary of Tata Sons, which is dealing with the retail space of Tata. So Trent is coming up with, and it's clearly written over here, you can see that Trent plans to raise funds through preferential allotment. So preferential means you are taking funds from your parent company in this particular case. The next example is of QIP. As we have studied, what do you mean by QIP? This is just to understand from the practical world that Cello World launches rupees 737 crore QIP, which means only the qualified institutional buyers will have participation in this particular offer. This news talks about that what will be the trend in the coming time, that it says that experts see QIP fundraising at a new high in FY25, and the major reason which are written in the article are, when you go for QIP fundraising, it's easy, fast, flexible, price is comparatively efficient, and compared to IP or compared to the normal public issue, it will have a less rules and less regulations. So this is what is the case so far as primary market is concerned. Thank you very much.